Hey everybody, welcome back. On today's video, what we're going to go over is actually a full breakdown presentation on what's happening in the market. I had done this presentation last week to one of the big 5 banks to give them a better understanding of what we're seeing on our side of things, where the market's going, where it's heading, and just looking at historically what could be happening. So next in this video, what you're going to see is me doing this full presentation. It's about 20 minutes. There's a lot of info in there. If you have any questions about it as you're watching, just simply put them below and I will make sure to get back to you. Thank you so much for watching and I hope you enjoy. All right, so what we're looking at here is basically just a breakdown where we're going to focus in specifically on what's happening so far in 2021, but we're also going to look at a history of the Toronto real estate market, breaking it down over the last 40 years, and just showing you, historically what's happened in the market, where we've had transitions, where we've had crashes, where we've had corrections, and then averaging it out, showing, based on the history, doesn't make sense to get into the market. And at certain points has it made more sense than it has before. So what we will do here is jump to the next page. And basically in this presentation, I'm going to go over 4 things. I'll give you a market update as of right now for the Toronto real estate market based on stats, not gut feeling, but stats, what I actually know that is happening. And then combining that with someone that's actually on the ground level doing this every single day, giving you an idea of why it's happening. So not just the numbers, but a little bit of, what we're seeing on the ground level as well. Then, as I mentioned before, we're going to go over that 40-year market trend because I think there is just no better indication of what the market's doing or what it could doing or what it could be doing. And, realistically, nobody knows what the future holds. The only data that we have is data from the past, and it typically will give us a pretty good indication of what will happen because any market cycle is usually 7 years to 8 years. We haven't really seen the correction that we thought we would see, and it's kind of gone past that. We're on like year 10 or 11 right now. Then we'll go with the 3 pillars of the market. So how do we know what the market's going to be doing in the future? It's going to be based on these 3 things. And then we'll go over the term called months of inventory, which if you don't know is basically the best indication to understand what is happening in the market. Is it a buyer's market, a seller's market, or is it a balanced market? So let's jump into it here. A quick introduction of myself. So my name is Tom Story. I run the Story team. We primarily sell in the 416 area code. For Canada, for Royal LePage, we're top 1%. We're in the top 100 teams in the country. And for downtown condo sales, we were actually top 3 in 2020. We're about 50-50 condo to homes right now, but definitely from the listing side, we do a lot of condos because our clients are transitioning into the housing market, which is really cool because a lot of them bought, 5, 6, 7 years ago, and it's built them the equity and appreciation to jump up to that freehold house, which is kind of awesome to see. We've also been one of the leaders in terms of market updates to the media. So I've had the unique opportunity where I get to go on these platforms and give them market updates. And obviously when I do it, I'm not wearing a baseball cap. I got my suit on and everything, but that's why I'm so, specific and geared in on the numbers. I really understand kind of what's happening, where I think a lot of people will kind of look at the numbers once in a while, but I want to break them down and give you an actual idea of what's going on. And little pitch here, if you want to follow us, we're super active on Instagram at the Story Team. Check us out there. All the information will be there. Okay, so let's go over the April numbers and I'll just get myself out of the way here. So here's what we know right now. For the detached market in the 416 area code, we are trading at about 1.7 million. In the 905, we were about 1.3. Semis were 1.3 for the 416 area code. So that's interesting. So a semi in the 416 area code, Toronto proper, is the same average price as a as a detached property in the 905. If you look at semis in the 905, they're 925. And then we go to townhouses. You know what's interesting here? So you look at detached. The gap in price for detached from 416 to 905 is about $400,000. If you look at semis, it's not quite that, but it's pretty close. Townhouses are actually close. So if you're looking to buy a property in the Toronto market to be closer, to the action in the city, your price gap for townhouse is actually closer in the 905 to 416 than it is in any other asset class. And then condos are close as well. In the GTA, overall, 905, we're seeing 612,000. And then in the 416 area code, we are at 727,000. Now, something to keep in mind is that price, 727, 137, that average condo price, and this is for April 2021 only, is the highest that we've ever seen condos. Now, most of these average prices are historically highs as well. But what's interesting is that the peak of the condo market before we had the lockdowns was about 720 to 725,000 back in February 2020. We then saw condos drop significantly, actually getting into the mid 600s in terms of average price point. And then when we hit 2021, they bounced back, and it only took them about 4 months to bounce back to the peak of pricing that we had seen in February 2021. So if you had bought at the peak of the condo market, you are now okay. It has already bounced back. And if you're one of the lucky buyers that took advantage and maybe watched some of our videos going over what was happening at that time frame, if you bought in October, you are laughing. Condo prices are up like 15% from where they were in October. They've totally jumped back up. And then our GTA average is about, $1.1 million. Now, these are April's numbers. And in March, the GTA average was actually higher than this by about 20 or 30,000. So it's come back to earth a little bit, which is actually nice to see. Now let's go over what the government has done in the past 5 years, because obviously the price growth that we've seen has been accelerated, and it all comes down to supply and demand and cheap money and lower interest rates, and the average Canadian over the last year specifically saving more money than they typically do. Because of the lockdowns, because we're not traveling right now, there's not entertainment, people are sitting on more cash than they're used to. But what could have it been? Because the government has come in and specifically tried to cool down the market, specifically the Toronto market. So in the last 5 years, here's what they've done. The 15% foreign buyer tax. So that came in on April 20th, 2017. Okay. The mortgage stress test, which initially came in on January 1st, 2018. And the new changes to the stress test that are happening now are going up to 5.25, being stressed at that rate. So it's going to impact your purchasing power. You're about 4 to 4.5% lower than you would have been approved for before June 1st. Rent control initially came in 2017. Now, that was when Kathleen Wynne was the premier, and that was part of the Fair Housing Plan. When Doug Ford came in to be the premier, he took away rent control for newer buildings. So basically how it works right now, if you are renting a property that was built and registered before November 2018, you are in rent control, meaning that at the end of your year lease, the rent can only go up based on the CPI index that comes out. But if you live in a building that has registered that is newer after November 2018, there is no rent control. So just to be clear, 2018 November is the new number. That number used to be 1991 until 2017 happened. So just so you know, there's a bit of confusion about that. The empty home tax, or let's call it the vacancy tax, that is coming in 2022. So something to keep your eyes on. And the short-term rental regulations, basically the restrictions on Airbnb that made it very difficult to run an Airbnb operation unless it is your principal residence, which flooded the rental market with one-year rentals, hence why rental prices currently are down about 15% from where they were at the peak. So that's what the government's done to try and cool down the market. Now let's go over the last 5 years of actual prices on the three main asset classes. So in 2016, you could buy, the average condo was $436,000. As of right now, it's $727,000. So we've seen a 66% increase on condo prices in the last 5 years. Now, we know historically that can't remain. You can't have double-digit price growth. It's just not going to happen. So at some point, there will be a correction there. And we saw it in 2020, but I just didn't think it would bounce back this quickly. So condos, purely based on appreciation, have been the best performing asset over the last 5 years. And I think it comes down to a few reasons. I think one of them is that they are affordable to get into the market for most first-time home buyers. If you're approved, it's basically like, well, you buy a condo in the city or you leave the city to buy a freehold property. Also, condos service three different classes, right? You got your first-time home buyers because you got smaller condos available for them. You got your typical downsizer. Maybe they're buying an older condo with a bigger floor plan and a bit of an older building, but it's a great downsizing option. And then you got the luxury market where, you got your luxury condos. But if you want to buy a house, well, you got to start with $1 million, but at least condos give options to different types of people depending on what portion of their life that they are in. Now, if you look at semi-detached, so they started in 2016, they're averaging about $901,000. They're now at 1.3. So semis total are about 45%. And one thing I want to draw your attention to here is that in 2017, See how the average semi was 1.1, and then 2018 and 2019, they actually dropped. And same thing on the detached market. 2017, they were 1.5. And then by 2018 and 2019, they dropped. So the reason that happened is because the market actually did have a correction in 2017 after the Fair Housing Plan came in. And this was the foreign buyer tax, the rental restrictions, and psychologically, it did cool down the market. It did what it was supposed to do. Now you can see in 2020, I didn't put in the numbers because April 2020 was the initial lockdown month. And I think those numbers just wouldn't represent what was actually happening. So here, and so by the way, when you're looking at these numbers, these are only April's numbers. Now, the reason why I chose April is because typically in a normal market, it is one of the higher sale price month. So to give you an understanding. Now, detached are up 35% over the past 5 years. That is closer to about the 7% yearly average that we're used to in Toronto, where condos are outpacing it and semis are outpacing detached. And the reason why is because, I'm going to put this in quotations, because semis are more affordable for a freehold option than your detached property is. So here's what's happened in the past 5 years. Now, seeing condos go up 66%, detached up 35%, and semis up 45%, I actually think it could have been way higher. Because if we go back here for a second, these are the 5 things the government have done in the past 5 years. I think without the stress test, without the foreign buyer tax, without rent control, the empty home tax, which is coming, and the short-term rental regulations, these numbers could have been higher. So I actually think the government did cool down the market. They just didn't expect this much demand on top of what they've done. Okay, so now we're going to jump to my favorite chart. Get myself out of the way here. So this is the 40-year trend, okay? So the 40-year trend in the Toronto market, this blue line at the bottom here, this is the 0% line. So if there's anything under there, it means that those years the market actually went down. And then anything above there, the market went up. So this is going from 1980 till 2020. So I want to bring this to your attention because basically we've had 3 major, times where the market wasn't great. We had the crash. So you see prices went up almost 40% in the late 80s, which is not good. And then they crashed pretty hard. And to get back to a year where we were seeing, not negative pricing numbers, took about till 1994. So from 1989 to 1994, you saw negative every single year. To get back to the price that it was at the absolute peak, and it went up 44% in a year and a half, basically in the late 80s, which is not sustainable. It actually took till just after year 2000. So we had a crash. That was the crash. It was the biggest crash that we've had. Now, it all depends on when you bought your property. And even if you bought in the peak in the late 80s, if you kept your property till today, you'd be laughing. So what I'm trying to get at with this chart is through all the ups and all the downs, in the last 40 years, we've had a crash. We've had 2 corrections. So here are the 2 corrections. In 2008, we had the financial crash in the USA. And well, I guess it was everywhere, but typically in the US. And that year, our prices didn't go up. They didn't go down. They just stopped. Our market just stopped. And then in the second half of 2017, and we had showed that in the previous chart, that's when fair housing came in, foreign buyer, rent control, the market jumped down again. And now it slowly started moving up. But the point that I want to get across here is that in the last 40 years, through all the ups and all the downs, you've averaged about 6.73% appreciation, compounding over that period of time, and paying down your mortgage, building your equity in your property. So if you've owned a property, you've gained 7% a year, basically through all the ups and all the downs. And what I also want to remind people of is that, let's say you sell in a great market, well, then you got to buy in a great market. So it's kind of relative, right? If you sell in the crappy market, you buy in a crappy market. So it's all kind of relative, but I love showing this chart just to give people an understanding on when you're buying real estate, it's a long-term play. It's always a long-term play. I think in certain markets in Canada and in the US, I probably actually wouldn't recommend you buy because the appreciation chart just doesn't make sense. But historically, if I know what Toronto's looked like over the last 40 years, I feel pretty confident that even in the tough times, it will bounce back. And if I'm not selling a property, I'm not losing. I'm going to hold them because that's how long-term, personally, myself, and what we've kind of trained our clients on is that's how you build long-term wealth. It's the slow, boring way of doing it. We'll jump down here to the 3 market pillars, okay? So we have interest rates, which are historically extremely low right now. Like we're seeing variables at 1.5%, fixed rates under 2%. It's crazy. It's basically free money. Immigration numbers. Obviously right now, immigration into Canada is not at capacity because our borders are closed. When the borders open, giddy up. Projection for how many people they want to bring in is very high. Where these people are going to go, a good percentage of them come to the GTA. They're going to have to live somewhere. It will first make the rental market jump back up a little bit, and then it will hit the housing market. And then our unemployment numbers. So when the lockdowns first started, a lot of people that had part-time jobs lost their opportunity for employment, and it was not great. But as we've seen over time here, a lot of the full-time jobs were still intact. And as I had mentioned before, people were saving more money than they previously were. So these are the 3 pillars. So how do we know if a market's going to go up or down? It would be based on these 3 things. If immigration's weak, interest rates are high, and unemployment's high, you're going to have a down market, right? But if immigration's high, interest rates are cheap, and unemployment rates are low, people can afford to buy properties, they can borrow money, and there's demand in terms of people coming here, the markets are usually pretty good. Now, just a few last things here. This is our month of inventory chart. So months of inventory is the best indication of what a market is going to do into the future. And to give you a better representation of it is what you do is the end of every single month, depending on the area and property type that you have, you go, okay, how many active listings were there and how many sales happened? And you divide them and it gives you a number. Anything under the number 3 is a seller's market. From 0 to 3 is a seller's market. Typically, that's when prices go up. A balanced market is 4 to 6, and a buyer's market is 6+ months of inventory. Based on the April numbers for 2021, there was 11,668 active listings in the entire Greater Toronto area, and there was 13,000 sales. So there was under 1 month of inventory. Now, under 1 month of inventory is an extreme seller's market. 2 months is a hot seller's market, and 3 months is a regular seller's market. So no wonder why prices have done what they have so far this year. Now, will this last forever? No. Over the past 5 years, the Toronto average for months of inventory is closer to 2.5–3%. And that's when we saw more realistic price growth. So it's not going to always happen like this, but it's very specific on micro markets. So when you're trying to figure out, is this a good time to buy? Is this a good time to sell? Run these numbers specifically in the area that you're looking, not just the entire GTA, because they can be a bit confusing. And then just a few kind of final thoughts here. These are just things that I personally, think are important. If you're buying real estate, buy it to hold it. This isn't probably a good sales pitch as a real estate agent that we help people buy and sell all the time. But listen, if you don't have to sell your property, don't. Keep it. Refinance it, pull some money out, help you get to the next property. It's amazing what it can do for your future. If you're currently renting, there's nothing wrong with that, but it is 100% interest. And even right now, if you get a mortgage, even in the first 5 years where it's interest heavy, still over 60% of your payments are going to principal. That's money in your pocket you're paying yourself. No matter how cheap your rent is, it's 100% interest. Leverage your money. If the bank's willing to lend you money at 1.5%, I know different generations think different about this, where, the older generation wanted their mortgage paid off, where personally myself, I like to take on good debt because it's leveraging my money for me. Build out your team, get people that you trust, get local experts that understand fundamentally what is happening, because there's a lot of nonsense out there. Make sure that the person you're working with really understands it. And if you're viewing a property, this is how you know you're going to make the right decision. Rank it out of 10 in your price point, but you can't choose the number 7 because 7 is average. And anything you buy, you should not feel average about, okay? So that means that if it has to be a 6 or below, which means move on. It's not the right place for you. But if it's at least an 8, okay, well, if you change the tile in the bathroom or you change the backsplash in the kitchen, does it become a 9? Because 10 out of 10 properties rarely ever exist. So I hope that was valuable to everybody. If you have any questions, you can put them in the comments below. You can also book a meeting with me. In the description, there'll be a link. You can book a meeting with me. Check us out on Instagram at The Story Team. If you want to check us out on YouTube, you're probably already watching here. So thank you for watching. And we actually have a weekly text list where we send out an exclusive 3 handpicked properties. And then we also send a little tidbit about the market, some insider info that you might not know otherwise. Thank you so much for watching this video. If you have any questions, please let me know. And remember, as always, home is where your story begins.